In 18th century, candlestick technical analysis were used to track the prices of rice. It's believed that candlestick can predict the market movement. Let's see few of the well-known and back-tested candlestick pattern that every trader should be aware of. A candlestick is a type of price chart used in technical analysis. It represents the current and past behavior of the market. In a candlestick, this is known as a wick or a shadow, and this is the body of the candlestick, and it represents the difference between the opening and closing price. If closing price is higher than the opening price, it's a bullish candle. If the opening price is higher than closing price, it's a bearish candle. The candlestick size signifies how strong the dominance in a bullish or a bearish condition. The long green candle with no shadow indicates most bullish. The small body at the top and long lower shadow indicates the second most bullish. The green candle with small shadow on both the sides indicates a normal bullish. The small green candle with longer upper and lower shadow indicates neutral bullish. The small lower green candle with upper longer shadow indicates the least bullish candle. Similarly, the long red candle with no shadow indicates the most bearish. The small body at the bottom and a long upper shadow indicates the second most bearish. The red candle with a small shadow on both the sides indicates a normal bearish. The small red candle with longer upper and lower shadow indicates a neutral bearish. The small upper red candle with lower long shadow indicates the least bearish. A series of candlesticks forms a pattern. Based on number of candlesticks, the pattern can be classified into single candlestick patterns, two candlestick patterns, and three candlestick patterns. Some of single candlestick patterns are bullish Murubozu. Bullish Murubozu has a single long green candle with no shadow. Bullish Murubozu forms at the bottom of the trend and leads to the trend reversal. Bearish Murubozu. The bearish Murubozu is a downtrend indicator. Bearish Murubozu has a single long red candle with no shadow. Bearish Murubozu forms at the top of the trend, leading to the trend reversal. Hanging man pattern is a downtrend indicator. Hanging man has a small body with a shorter upper shadow and a longer lower shadow. The body color can be red or green. Hanging man forms at the top of the trend and leads to the formation of a downtrend. Hammer pattern is an uptrend indicator. Hammer pattern is a small body with a shorter upper shadow and a longer lower shadow. The body color can be red or green. Hammer forms at the bottom of the downtrend and leads to the formation of an uptrend. Inverted hammer pattern is an uptrend indicator. Inverted hammer has a small body with a longer upper shadow and a shorter lower shadow. The body color can be red or green. Inverted hammer forms at the bottom of a downtrend and leads to the formation of an uptrend. Shooting star is a downtrend indicator. Shooting star is a small body with a longer upper shadow and a shorter lower shadow. The body color can be red or green. Shooting star forms at the top of the uptrend and leads to the formation of a downtrend. Doji. Doji is formed when opening and closing price are same, where neither buyers nor sellers are making profit. There are few types of dojis: standard doji, long light doji, dragonfly doji, and gravestone doji. Two candlestick patterns. As the name says, a pattern is formed with two candlesticks. Some of the few two candlestick patterns are bullish engulfing pattern is an uptrend indicator. In a bullish engulfing, a short red candle is followed by a long green candle, which completely covers the previous red candle. Bullish engulfing forms at the bottom of the trend and leads to the trend reversal. Bearish engulfing pattern is a downtrend indicator. In a bearish engulfing, a short green candle is followed by a long red candle. Bearish engulfing forms at the top of the trend, leads to a trend reversal. Bullish harami pattern is an uptrend indicator. In a bullish harami, a long red candle is followed by a short green candle. Bullish harami forms at the bottom of the trend, leading to the trend reversal. Bearish Harami pattern is a downtrend indicator. In a bearish Harami, a long green candle is followed by a short red candle. Bearish Harami forms at the top of the trend leading through a trend reversal. The piercing line pattern is an uptrend indicator. Piercing line pattern is a long bearish candle followed by a lower bullish candle which forms just above the mid-range of the previous red candle. The piercing line forms at the bottom of the trend and leads to the trend reversal. The dark cloud cover pattern is a downtrend indicator. The dark cloud cover pattern is a long bullish candle followed by a upper bearish candle which is just above the mid-range of the previous bullish candle. The dark cloud cover pattern forms at the top of the uptrend and leads to a trend reversal. Some of the few more two candlestick patterns are bullish kicker. Bullish kicker has a small bearish candle followed by a long bullish candle which forms completely above the bearish candle. Bullish kicker forms at the bottom of the downtrend and leads to the trend reversal. Bearish kicker pattern. Bearish kicker has a bullish candle followed by a bearish candle which forms completely above the bullish candle. The bearish kicker forms at the top of the uptrend and leads to a trend reversal. Tweezer bottom. Tweezer bottom consists of two candlesticks, the first one being bearish followed by a bullish candlestick where both the candlestick make same low. Tweezer bottom forms at the bottom of the trend and leads to the formation of the trend reversal. Tweezer top consists of two candlesticks, the first one being bullish followed by the bearish candlestick where both the candlestick make same high. Tweezer bottom forms at the top of the trend and leads to the formation of the trend reversal. Let's see some of the three candlestick patterns. Morning star is an uptrend indicator. Morning star is a long red candle followed by a small bullish or a bearish candle and a long green candle. Morning star forms at the bottom of the trend leading to the trend reversal. Evening star is a downtrend indicator. Evening star is a long green candle followed by a small bullish or a bearish candle and a long red candle. Evening star forms at the top of the trend and leading to the trend reversal. The three white soldiers is an uptrend indicator. The three white soldier has three long and equal bullish candle with a short shadow. Each candle open and closes above the other candle. The three white soldiers forms at the bottom of the trend leading to the trend reversal. The three black crows is a downtrend indicator. The three black crows has a three long and equal bearish candle with a short shadow. Each candle open and closes below the other candle. Three black crows forms at the top of the trend leading to a trend reversal. Some of the few more three candlestick patterns are three stars in the south, advance block, three inside up, three inside down, three outside up, three outside down.